Howdy Wall Street Willie, what are the advantages of investing in cryptocurrencies? Cryptocurrency prices are very volatile, meaning that they increase or decrease in value very quickly. This presents opportunities for skilled investors to earn high profits through day trading or long-term investment in cryptocurrencies. Since there are no third parties like banks involved, crypto transfers are easier and faster. They can also help diversify your portfolio and hedge against inflation, as they are not directly impacted by traditional market fluctuations. Are there any disadvantages of crypto investment? Their volatility is also a huge negative, since individual investors can lose a huge amount of money very quickly. In addition, while crypto itself is secured through encryption, crypto fraud is quite common, and billions of dollars have been lost to crypto scams and hacks. Since the market is largely unregulated, it's possible to lose all your crypto if someone steals your digital wallet's key. Also, there is a significant environmental impact of crypto investment due to the high energy requirements of blockchain technology. For instance, mining popular currencies can sometimes require as much energy as entire countries. Crypto transactions are irreversible. If you lose your key or send crypto to an incorrect address, you cannot retrieve it. Crypto doesn't have any regulatory protections like FDIC insurance. Also, since it's still quite new and regulations are still evolving, any regulatory changes and crackdowns can have a significant impact on crypto's future. Should I invest in cryptocurrencies? Although some experienced traders might be able to profit from crypto investing, it's just far too risky to be a good choice for individual investors like you and me. The chance of losing a significant amount of money is just too high to make it worth it, alongside the other disadvantages. If you want a good high-return investment, a far better choice is to invest in stocks through a broad-based index fund, like one that tracks the S&P 500. This way, you can get guaranteed high returns over the long term, while not having the incredibly high risks involved with crypto investment. If you still want to invest in crypto, make sure it's not more than 10% of your portfolio. It's best to have other traditional investments, like stocks and bonds, before dipping your toes in crypto. Even after all this, you should be prepared to lose your entire crypto investment. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.